A very good evening, everybody. Welcome to the webinar, How to Create a Trading Plan for US Indices. I'm Ming Hui from Phillip Futures, and this is the second part of the two-part webinar series held in collaboration with CME Group. Speaking to us today will be Mr. Wong Kon. He is an investment and trading strategist with more than 20 years of experience in the finance industry. In tonight's webinar, Konha will continue sharing his knowledge of the US indices. And before I pass this on to him, I'd just like to inform you that if you have any questions throughout the course of the webinar, please feel free to drop them into the questions box as we will have a live Q&A session towards the end. And now without further ado, let's have Konha speak to us.
Okay, thank you, Min Hui, and I also want to thank you, my sponsor, Chicago Mercantile Exchange Group, that sponsored this event on how to create a trading plan for US indices. And of course, I want to thank you, Phillip Futures, for having us, and also more importantly, the audience tonight that you tune in at 7. Now, the first part we share about the trading profile, how to plan, how to equate trading profile. It seems like a very basic fundamental question, but it is very important. So tonight I'm going to give you a very short recap on the trading profile along the way, but tonight we're going to zoom into how to plan for a trade, especially in these two areas about short-term trading and as well as intraday trading. So you're going to learn this too, how to plan, how to spot for opportunity, a trade. Now I'm just going to move on very quickly into the topic tonight. But before I share, I just want to share a little bit about myself. In the industry unknowingly for about 25 years. I thought that it's still 20 years, but it's really 25 years. So anyway, the last 8 years, I would say took a break, but I stepped away from the corporate and being a self-employed as well. It was that was 2000, after 2008, the Lehman crisis. I continued to stay in this marketplace for about the next 4 years. And then after that, it got me really busy because of all the paperwork, all this and that. But my love is really to analyze the market. And in 2013, I took away from the corporate stage, and I just stepped back and I invest and trade with my own fund. And in the same time, it was also quite a privilege that different exchanges that also invited me to design programs for them. Who are they? SGX. And as well as a CME Group as well. So it's really a privilege to be here tonight. And what do I specialize in the area of behavioral analysis. Now, what's behavioral analysis is called basically market psychology. So over the last few years, the latest portfolio I have is also to help the lawyers to write forensic report to study into the prices. And tonight you'll see that. And write reports whenever there's trading dispute, and then of course it's for the judge to decide who is the claim the case. So that's the latest update that I have. And just going to zoom down to the topic very soon. And before that, very important disclaimer. So now what I'm going to share with you tonight is really how to identify opportunity between short-term trading and as well as intraday trading. How to plan for it, how to identify it, waiting for the opportunity to come, and how to take advantage of it. Okay, so later on, I hope that the rest of the 15 minutes that we have, that means I'm going to present to you my case until about 7:45, about 45 minutes. Then I hope that the next 15 minutes, the last 15 minutes that we have, that I'm going to take on some question, and if possible, I will also showcase some of the current market chart to give you some practical exercise as well, so that I hope that you can apply what you've learned tonight to work once you get started in trading, or if you are already trading. I hope that it will be a blessing to you with my sharing tonight. So, well, as I'm going to share the current market and about my view as well, you have to understand that all these views are my personal view. Is not of the view from the organizer, and all these views are for my personal consumption. So if you are somewhat influenced by my thoughts tonight, you're going to take action right away, or tomorrow, or next month. You thought about what I've delivered and inspire you want to take action, is really at your own accord. And please also consult your financial broker as well. So part one, we discuss about profiling. Profiling means that before now, most of the traders or investors fail. I have come to a conclusion that's because they fail to plan. They do not know exactly who they are. So we study into the nature, the human nature, the very human nature about most of the traders or investors honestly, after so many years, I realized that there's a survey being done that most of them love short-term trade, but most of them ended up with long-term position that is not carrying all these losses. Why is it so? Because deep down in most of the human nature that we want quick bucks. So that became a problem. Now in part one, we described about the trading profile. It seems like a very basic topic, but it's one of the most fundamental. That's my belief that everyone should know about before they start engage in the trade. Exactly, you have to define and you have to know how are you going to hold this position. Is it going to be a long-term investing, short-term investing, short-term trading, or for intraday trading? So you have to know even before you trigger that trade. So that's what we discussed about it in part one. And I think it's being recorded. You can go to the platform to view it. So tonight we're going to touch on part two right now. Okay, now part two, I'm going to go straight to the trading strategy. About the managing risk, I think I'll leave it to the Q&A time that we have. Then I will able to look at some of the most current market and we can talk about it, how to manage risk as well. So I'm just going to jump straight to the trading strategy where I'm going to describe to you, to share with you how to plan for a trade, identify for a trade between short-term trading and intraday trading as well. Now, just to give a note to thank to our sponsor, which is Chicago Mercantile Exchange Group. Just want to showcase some of these 4 slides that they have. So about 2 years ago, they launched this micro E-mini index, US index futures. I think it's so timely because as the price escalate, things are getting really expensive in terms of the notional value of every US indices. So I'm glad that whoever have come up with this idea back in CME Group, he's such a visionary, or she's such a visionary. And basically, this micro E-mini futures is just shave off the size, the quantum of every E-mini index futures. Now, you could see that since after it launched about 2 years ago, volume have picked up tremendously over the years. And especially at the time of very uncertainty that was during the pandemic last year in 2020, the volume even more picked up tremendously. So basically, they have launched the micro E-mini index futures. Now, retail investor could trade into the Russell, NASDAQ, Dow Jones, and S&P as well. Okay, so later I'm going to explain to you very quickly. And this is a comparison between the mini S&P and micro mini index, sorry, micro mini index. So the blue one is the E-mini index and the gray is the micro index futures. So now you can see that the volume have picked up tremendously over the past few months, this is a measure of the open interest. Now, open interest to me is very important for me to qualify whether this contract is tradable for me as a trader or not. Now, why is it open interest is important? Because modern open interest measured those positions that hold overnight and more than 2 days, it captured that. So it's very meaningful to me because it means that the participants take ownership of the contract and decided to hold overnight. So it's a good measurement, good gauge to me whether this instrument is of a certain quality or not. So you could see that in gray, the micro E-mini US index has been growing from strength to strength. So it's a very clear indication to me that this contract it is good. Now, how to qualify whether this instrument is tradable? Being a short-term trader and intraday trader, there's 2 things I look out for. Number 1 is liquidity, which is open interest, as you could see, is growing from strength to strength over the month. The number 2 thing that I look out for is volatility. Now, it's different from investor though. Now, trader, 2 things I need from the market is volatility and liquidity. It must have these 2 elements before I qualify the contract, whether is it tradable or not. So what I'm going to share with you this skill tonight is really from the last 25 years. And you could apply in any market. Okay, you could apply in any market, but let me just get tonight the example I'm going to showcase is all the US indices. Now, about the micro E-mini index futures, something that I think being an Asian, I'm quite proud of. You could see that Asia Pacific, since the launch until today, about 2 years by now, the market share that the retail investor or the traders that trade this micro E-mini index futures have been growing as well. we are capturing bigger pie of the whole market. So which I'm quite proud, and that was the time that I also start partnering with CME Group as well. I'm not claiming any credit here, but I'm just being honored to be able to be part of this group. And about a year ago, no, less than a year ago, but in August last year, they also launched, because of the success of the micro E-mini index futures, the US futures, they also launched the micro E-mini options. So now you find the market is extremely volatile, but yet you have a view on the major direction. Maybe you can consider micro E-mini option, and that's how I use option. Now, different traders will use different set of instruments differently. For me, I always prefer the outrights. When I say outrights, I'm referring to micro E-mini US index futures. That's called outrights. But how I apply option is that when market is really uncertain, very volatile, but yet I have a view, but it's extremely volatile, but yet I have a view, I may consider to deploy the options. That's how I use options. Okay, we're good, and I'm just going to go straight to the topic tonight about trading strategies between short-term trading and intraday trading. But before that, let me also define to you what I'm expert in behavioral analysis. And what exactly is behavioral analysis? Okay, so now being a trader compared to investor. Now, being an investor, I need three things from the market. I need the charts to tell me where we are today. I also need the behavior analysis, which I'm going to describe to you shortly. But being an investor, I also need the third thing, which is I need the fundamental analysis. But tonight, I'm not covering the investment portion, so I will go straight to the trading portion. Now, being a trader, now all of you, I just assume that 110 of us, we're all traders. Just assume that we're all traders. There's two things I need to help me to analyze the market. Not so much on fundamental analysis anymore. Two things that I need is technical analysis and behavioral analysis to help me to formulate trading ideas. Now, what is technical analysis? Basically, it tells us where we are right now. Okay, as we look at a chart, this is a NASDAQ. So basically, it's telling me right now today, as I checked before the webinar, the NASDAQ currently is at 13,300. Where this slide I prepared this on the 31st of March. Now, it basically tells me where we are today, and if you look at the time frame over the last 20 years, this is where we are today, at 13,300. So it's around the high. So chart tell us around the high, and I felt that if most of the traders just apply chart mechanically, I think that's not my idea tonight. So I'm going to introduce you to behavioral analysis as well. Now, so most of the chartists will do this. They are quite mechanical, and I felt that I personally term them as a zombie trader. Zombie trader, what do you mean by zombie trader? It means that they literally follow the charting or what the book says, that if the indicator points above 100 and cross down, they sell. So it's very mechanical, and it's below about 30 points or it's about zero, when they start to cross up, it's time to buy. So they follow very faithfully, or whatever golden cross, or they may have no, or they just follow very blindly. Or they say that when there's a hammer, you should buy into it. So they just follow it very faithfully, but also very blindly. But let me just introduce you to behavior analysis. Of course, I believe and I use technical analysis very, very intensively, but I cannot do it without behavior analysis. Okay, technical analysis, being a trader is important. For those that just join us, being a trader, I need two things to analyze, to help me to analyze the market. Number one is technical analysis. Number two is behavioral analysis. Now, what is behavioral analysis? In a layman term, it's called market psychology. Now, basically, once you include behavioral analysis to technical analysis, it tells us why it moved as such. It tells us why it moved as such. We study into the market behavior. We need to know why the market moved that way. We need to know that. Okay, let me just give you an example. And if you could combine the two together, TA plus BA, it became a precision trading. To me, it's a very powerful analytical tool, not a system. The system is in our mind. Okay, so tonight I want to train all of you how to apply our mind, the brain that we have. It's not a system. It is, our system is the mind. Okay. Now, of course, for precision investing, then I will include FA, fundamental analysis as well. Okay, let's just zoom down into trading. just apply technical analysis and behavior analysis. Yes, it's true that sometimes as a short-term trader, I do not really consider all this fundamental analysis. I will just zoom into the price data analysis, which is technical and BA. Now, let me just introduce one of the very interesting indices that I bought. Now, every week I bought the weekly chart or monthly chart of every market to source for opportunity. Now, what is Russell? So basically, in US, there's 4 major indices, but Russell. Okay, Russell is the least heard of. So we know about NASDAQ, we know about S&P, we know about Dow Jones. How about Russell? Okay, Russell 2000, it basically measures 2000 smaller US listed companies in the US market, the smaller size one. How small are they? Basically, I just did research this afternoon. It's between the size of 3 billion and below. Between 100 million, the market cap, to about 3 billion. But if I'm going to add up all these 2,000 companies, a smaller size listed company in US, it's still going to worth about a few trillion US dollars. So Russell to me is also a very important indicator of the whole market. Now, sometimes if I may not have an idea about NASDAQ, S&P, or Dow Jones, I may just play around with Russell to get some idea. So tonight, just going to introduce how to use TA and BA to form some ideas. And now, so basically is this, you could see that Russell, so it's very important because this 2,000 company also employ the huge, large working force in the market. Okay, so most of the US company we know about Google, Apple, we know about the big names, but the 2,000 companies is of a large market cap as well. It's worth about a few trillion US dollars. So we should not ignore this 2,000 companies as well. Now, what we see here is that we could see that over this year onwards, today is already April, a quarter have passed. We could see that the Russell 2000, it has grown from strength to strength. We could see that it peaked. By now, we saw there's 3 peaks, right? But most of the technicians, they use it very mechanically, is that they saw that, oh, this is called a divergence. So basically, what indicator am I using right now? The below, it represents the MACD. So basically, this is how we spot for market weakness, is that when the price is moving up, but the indicator is pointing downwards. Now, most of the chartists recognize that it's a divergence. They say it's time to sell. Now, let me just include behavior analysis to this understanding. Now, what does it mean? It means that, remember TA, it means it tells us where we are today. But BA, it tells us why that's happening. Now what is indicator? Whether you're using RSI, MACD, or whatever indicator. So to me, indicator, I use it as it measure the strength of the prices. Let me just repeat that if you miss it, okay? Now, for me, how I use indicator is that it measures the strength of the prices. Now, let me just explain to you how I analyze the market for Russell 2000. Now, as the price hit a new peak each time since the beginning of 2021. Now, since the indicator measures the strength of the price, it represents this. Now, we could see that the price itself is hitting new high each time. But let's look at the indicator. Now, a very healthy uptrend, the peak of every indicator should also move up as well. So if this chart is that the indicator is also, each peak is a higher peak than the previous, this represents that it's of good strength. The market demonstrates to me that it is still going up because it's building from strength to strength. And I'm viewing that the strength is there as it moves up. But however, now you could see that as of 31st March, I captured, even today is still the same, nothing has changed. The peak has been a lower peak. Now, this is what I call a divergence, market divergence. Now, still remember what I said earlier about behavior analysis. It tells us why the market moved the way it is today. So how I analyze the chart using behavior analysis is that using indicator and price is that as the price are moving higher, but you still remember how I define indicator, it measures the strength of the price. So in this case, the measurement of the strength of the price is telling me that although it's hitting new roof, but the strength is getting weaker by the day. So now I would suggest to sell anytime now. It's just telling me this. Now this understanding is just telling me this, that the market is, we have to be very cautious because the market may not be as strong as we think that it is right now. Many of us say that, wow, Biden have thrown in trillions of US dollars in the financial market, the market will go up. Yes, it's true, but the underlying strength is representing to me that there's a divergence, that the strength is not as strong as it appeared to be. Now that's called technical analysis. So I hope that you get some insight. So basically, if I look at NASDAQ, S&P, Dow Jones, it have not shown me this demonstration yet. But when I study into Russell, which is a 2,000 smaller size company in the US market, the listed US market, it is indicating to me that there's some weakness going on. Now, how am I maneuvering the US market today is that it's still on an uptrend, but recognizing that it seems that Russell is taking the lead in this weakening uptrend. Seems to me that Russell is taking the lead. I have to be very cautious about the uptrend in the coming days, weeks, and months because of this Russell's analysis. Okay, I'm just gonna move on very quickly. Now, basically how to understand Russell is that, like what I say, there's 4 micro E-mini index, US index futures. So now how you understand every index is worth a lot of, is very meaningful to me. So basically to understand an index futures, first you have to understand one thing, which is how much is the worth of 1 point. Now, the contract specs states that 1 point is worth $5 US. Okay, so it's other rest. You could see it's a different creature completely. So now, if today Russell is at 2,300, say for example, you see there's a case, a view that you want to buy into Russell right now, or even to sell short the Russell at 2003, what does it mean? Now, since 1 point is 5 US, if I'm going to buy at 2003, it means that 5 US dollars times 2003, it represents 11,500. It also means that I'm buying into 2,000 companies, US listed company worth at this point in time, worth 11,500. This is what it means. So it's very meaningful, very meaty to me. Okay, this is what we cover in part 1. I specifically say that before we plan for a trade, before we trigger that trade, whether it's a buy or sell short, we have to know very clearly. Of course, there's a reason why you trigger the trade. We must have some view, right? But before we trigger the trade, confirm the trade done, we have to start planning. Is it for short-term trading or is it for intraday trading? Okay. Now, short-term trading, it means that I have a view now. I'm going to make a purchase or sell short. I'm not going to hold it for more than 3 months. It's between 2 days to 3 months. That's what we explained the part 1. And tonight I'm going to explain the trading strategy for short-term trading and also the trading strategy for intraday traders as well. So intraday trading, obviously, it means that you only have a view within the day until 4 a.m. the market close, and that's it. I have no view to carry this position overnight. Okay, so that's what we study about the part 1. But tonight we're going to dwell into this two about on the trading strategy itself between short-term trader and intraday trader. Short-term trader means that I have a mandate, I have a view to hold this position between 2 days to 3 months, and intraday is within the day itself. Okay, we're going to move on. Okay, just want to also share my excitement that I just received a news from CME Group that they are going to launch a new contract called the Micro Bitcoin Futures. And basically, Micro Bitcoin Futures is about 50 times smaller than the regular Bitcoin futures. I'm all excited about it. Now, you have to understand that I'm together with a lot of expert panelists view that I do not hold any view on investing into into Bitcoin. Investing in Bitcoin, I felt that is very senseless at my personal opinion, and I do not know how to equate the prices. But you have to understand that Bitcoin futures is a different creature. It's more for traders. Traders, just like I explained, is between 2 days to 3 months, or intraday trader. So I do struggle when I want to trade with Bitcoin. When I want to trade Bitcoin means that I want to trade below 3 months period. I couldn't find much of a platform, which I'm very thankful that on the 3rd of May, they're going to launch this Micro Bitcoin Futures. It's meant for trader, it's not for investor. It also meant for hedger. I also do some hedging as well. Means that in the event I see that the Bitcoin is going to fall, I may want to do a sell short as well. So I'm all excited about it. I told the my sponsor that I think it's going to be a hit on 3rd May, because in this environment, I do struggle to trade the Bitcoin. Trade means that below 3 months. It's not for investment. Okay, let's move on. And let's go into the trading strategy of this profile called short-term trader. The trading strategy for short-term trader is this. Now, that's how I trade. And I just want to share with you how I plan my trade, how I think, how I plan, how I analyze a trade. Now, even as a short-term trader, remember short-term trading, your profile is you hold a position between about 2 days to about 3 months. Now, even as a short-term trader, I have to understand where is the trend right now, because it's going to help me tremendously. Now, say for example, I'm just going to showcase one example on the uptrend. If you view that current market, the US indices is on the uptrend. So being a short-term trader, you do your best. You do your best to buy on dips, because the trend is in favor for you to buy on dips. So you just have to remember that if you recognize that the current trend for the US indices is uptrend, as a short-term trader, you do your best to buy on dips. Now, this is how it works. This is the uptrend. And how I buy on dips is that every time, say, for the next few days or next few weeks, you could see that it always happened that the market have some bad news, it start coming down. Now, recognizing that the US market, even today, although just now I talked about the divergence of the Russell, but that one is just a warning. But I have to recognize that it is still an uptrend. How I do being a short-term trader is that I will still buy on dips. I will still look for opportunity to buy on dips, something like this. Okay. Now, every time the market fall for the next few days, next few weeks, or maybe stretch to one or 2 months, I'll be looking out for opportunity to buy on dips, because I recognize that the whole US stock index, it is still an uptrend. So what are the things that I'll be looking out for? I'll be looking out for formation like a hammer. Of course, it's not just technical. We study into the market psychology or the behavior analysis of hammer. So I think I'm very, I would say I'm famous for, but people know me that I look out for, I hunt for those candlestick or hammer that carries high weighting. I hunt for those, okay? And you can achieve that later. I'm going to share with you, and video is free. You can view it after this program. How to hunt for those hammer that carries high weighting. Because when you look at a chart, there's a lot of hammer all over the shop, but you should be very selective to select the hammer with higher weighting. Then you go for it, okay? So this one strategy here is that even as a short-term trader, you have to understand the trend. Now, if the trend is uptrend, you try your best to wait for dip to come, and when a hammer like this with high weighting surface, then you can start to get into the market and expect for the best with a measured risk. Because we're trading, we're not investing, so you have to understand that as long as you're trading, always have a measured risk. Okay, so earlier I talked about how to identify those hammer with high weighting. So this is a program that you may want to log into. You can QR code scan, it's free. I did it with the organizer as well, and I recorded it. So I thought that the program went so well, and a lot of them like it. They are so thankful that they finally know how to identify what are the hammer that they should select. Okay, so after this program, I think it's still early at 8 o'clock. You may want to jump into this program called Identify Market Reversal. Just gonna hang on with you for the next 3 seconds. You can do a screen capture, but please don't watch it now. I only have the next half an hour with you. Okay. Now, so then you may ask me, so Kon Hao, in the uptrend, can we not sell? It means that can we sell? Of course you can, but you have to recognize that on the uptrend, that these are retracement. Usually it's quite short. Now, whenever you see an inverted hammer with high weighting inverted hammer, means that we don't look for, we are not casual about looking for inverted hammer, but we have to source for those inverted hammer that has high weighting. Now you have to understand that if you find that there's a sell short opportunity against the trend, but make sure you hold your sell short. It means that the next few days to next few weeks, you've got to be very cautious, because you have to recognize that you are going against the trend. So if you want to sell short, go ahead in uptrend, but make sure you keep it really, really short term. Okay. So
Now, I just want to give you some idea even about something about bigger picture here. And later I'm going to bring you a point here, how I manage this, why I say that I'm very cautious when I study into Russell. You give me some clue that the US market, there's some divergence going on. And it seems like Russell today is taking the lead on this idea among NASDAQ, Dow Jones, and S&P. Okay. Now, so a lot of my friends say that, hey, Konghao, don't worry. Look at the last 100 years in the US history, stock market history, it has been going up. So even I'm stuck now, it's okay. You should bounce up, you should go up. They say over the last 100 years, US market has been going up. And I disagree with them. I say, no, look at this. The US market have not been going up the last 100 years. If you look at 1910 to 1980, US market is still at 2005. Okay. The US market has only been going up since 1980 until today. So it's about 41 years. Now this is a non-linear chart. It means that it measures the percentage movement. And I just want to appreciate the volatility before 1980 until today. So basically from 1980 until today, the rate of change is quite smooth, but we've been seeing uptrends for the last 41 years. So now, so what happened here is that I want to understand this market, there are cycle. Okay, at the moment, US market is still on this uptrend. Now let's study the last cycle. The last cycle started after the Great Depression, and you could see that a very nice cycle lasted for about 45 years. And I also want to study into the correction, market correction. This was about 70%, and this Great Depression was 89%. So what we witnessed in 2008, the Lehman crisis, it was about 50%. So it's nowhere close to about 70% or 90%. I would say that over the last 41 years, these are just market taking a breather, including the pandemic. Markets also taking a breather. So I recognize that if we study into history, a correction is at least about more than 50% to about 70%, and that's called correction. Now, I just want to look at the recent cycle, which lasted for 41 years. And then I got to ask myself where we are today. Yeah, I'm getting there very quickly, okay? Just bear with me. Where we are today, and I have to tell you this, as a short-term trader, we are still on the uptrend. But as an investor in the US market, I am very cautious right now, okay? I'm very cautious, but trading-wise, I think it's still on the uptrend. It's not getting any weaker yet, but Russell is giving me some clue. So for the next few weeks to next few months, I got to eyeball like a hawk. So any changes, I have to act very quickly. Now, so we understand this logic. Just imagine that this major cycle was lasted for 41 years already, right? Now, if I were to place a dot, let's say this is a 40 years time frame for US market as we have studied. Now, I need to understand, even as a short-term trader, I need to understand when to hedge and when to trade, okay? So as of now, again, US market, I analyze that it is still on an uptrend. So basically, as a short-term trader, you buy into dips, okay? Simple as that. Now, if I were to give an analytical view about the US market, I would say that the trend is still uptrend. So therefore, as a short-term trader, you buy on dips because the trend is still uptrend. Now, why I say the risk is very high? Now, the risk is high because I do not want myself to get a position stuck. Being a short-term trader became a long-term investor because once the market starts to turn, I do not want my position to get stuck. So therefore, I rate the US indices as risk is high. Okay, so we agree with this point, right? But is the US indices volatile? It is very volatile. Now, again, at the beginning of the program, I did say that volatility is good. I say being a trader, I look out for two things. If you still remember that, number one is that it must have liquidity, and number two, it must be volatile, because when there's volatility, there is opportunity. I'm going to show you how it works. I just want to give you the structure, how the plan for trade, being a short-term trader. Okay, if I'm going to place a dot over the last 40 years, 41 years, where will I place the US market? I think I'll place around here. It's not the high yet, but maybe it's close to it. I do not know exactly. Okay. Now, so of course, in every trend, there's an inner trend. let's say, for example, we know that there's inner trend, but since we are in the uptrend of another major uptrend, so there's a trend. Now, every time when the market took a dip, as a short-term trader, recognizing that it is still an uptrend, I will always look for buy on dips opportunity. Now, just sharing with you this because most of the traders, I felt that they tired themselves out very easily because they trade all over the shop. One moment they're buying, the next moment they're selling, and after that they got lost, they lost some money and they get very tired. So maybe I'm of a different creature, my personality is different, but I tend to want to recognize a trend and buy on dips. It's much easier the way. It's so relaxed and so much more fun. Okay, so basically we recognize that in a super major trend, there's inner trend. So every time the inner cycle, we look, every time the market starts to dip, don't get too frightened by the market or the news, but you just continue to look for buy on dips opportunity. Focus on the hammer that has waiting. So of this program, I will recommend that you visit that 1 hour program. Okay, that program is free. Now, so I also have this chat group. Later I'll share with you how you can get into this chat group as well. So every week I will post a case study. So now you recognize to identify certain hammer or certain behavioral market psychology of the market. Now, this is what I did. And over the years, I've been very consistent with my trading strategy and I enjoy sharing anyway. Now, I say that to this chat group, my Telegram chat group, I say that was posted on 26th of March, 2021. But I derived this view on the 27th of Feb. I have an interview over the media. So I say that, I posted this on the 6th of March. I say that the US market was still moving south. That means it kind of came off. End of February to the beginning of March, the markets came off quite badly. Okay, so a lot of people are very frightened. But I kind of want to comfort those traders. I say that there's opportunity around here is that it's still moving south, but I analyze that the main trend is still up. That's what we studied earlier. Therefore, I view the market as a retracement. It's not correction, it's a retracement and looking out to buy on dips with a measured risk. Okay, that's why I say. Now, again, in the same messaging with the chart, I say that the following case study demonstrate the biting point on buy on dips. So we studied that earlier. And this case study will be suited for those who short-term trader. Now, short-term trader, how I classify them is those that hold a position between 2 days to 3 months, as I studied into the 16 minutes chart very recently. Now, I'm just going to zoom in into what I presented on 6th of March, or before that, 27th of February. Now, you could see that in, now we all have, we're just part of the human race here, is that we all have very short-term memory. But I can tell you that in end of Feb to March, the drop was pretty scary and a lot of people got freaked out. Most traders got freaked out. But I told that, hey, you have to remember we are still part of this uptrend and these are just retracement. It's not correction, so don't get freaked out. So constantly look for buying opportunity, and we recognize here as a bullish engulfing body, and we also recognize here as a hammer that has waiting. Now, there's a lot of hammer all over the shop, but please pick the right one, okay? So this hammer that carries waiting, then subsequently, these are the bullish engulfing body that we saw and hammer that we saw. And then that was on the 30th of March, and today Dow Jones is at 33,300, about there. So it's much higher. But I just want to point out one thing to you here is that how we plan, or how I encourage my traders or my participants to, or my follower to plan their trade is this. If you plan that you're a short-term trader, now recognize that we spotted this view buy on dips on the 6th of March. Now, up to today, how long is it? It's about a month. Okay, and you should still hold on to this position as well, or at least partial the position. Along the way, of course, you can take some profit. So 1 month have passed. Is it fulfill the part of the plan, the trading plan for being a short-term trader? The answer is definitely a yes. Okay, so getting in, but let me just recap here is that identify the trend. If you're a short-term trader, always remember what's the trend. If the trend is uptrend, then your focus should be buy on dips. How to buy on dips? You look for those hammer with high weighting. Then how long should you hold? Between about 2 days to 1 month or 3 months. It really depends on what can the market offer us from then and then. Okay, now this is very interesting here. Now earlier I demonstrated the day 60 minutes chart, right? But let's look at the daily chart. Now in daily chart, you could literally see the uptrend here. Okay, I just trace this over. You can literally see the uptrend here. So during the end of Feb to the beginning of March, market came off quite badly. So a lot of investors and traders, they kind of got this illusion. But on the 6th of March, we are very focused, continue to buy on this because we're still part of the major uptrend. So you see the point here? Yeah, so kind of this chart kind of conclude whatever I just spoken about, that how we plan for a trade and how I would advocate that you should plan for a trade as such as well. Okay, I'm going to move on to intraday trading very quickly because I already explained that the last on the part 1. And while explaining, there will be a Q&A. Please submit your questions soon. Don't wait until I open up the Q&A. Then Min Hui over there will collate the question and she'll ask me the question. Now, intraday trading is this, very simple. I'm still going to dwell into Russell. So basically 1.5 US dollars. Now, how to do intraday trading? The whole idea is this. Now, you know, as a big intraday trader, that means once you plan, you stick to it. That means I have no view for tomorrow. It's just today because the market is very volatile. And I say that volatility is good for traders because volatility created extreme movement, which I like it a lot. It created greed and fear, where I have no time to explain to you how it works. But anyway, the part 1 we explained about the market dynamics. Now we have to recognize that in March and April, the dynamics compared to last year is a bit different. Now, what do I mean by market dynamics? So basically, I just measured March and April. The typical daily movement is about 110 points. And last beginning of this year, the market movement was just about 55 points. So market is not that volatile then, but today market is very volatile, including perhaps I think tonight market will remain as volatile. Now the trick is this, to take profit in the intraday trader, it really depends on the current market dynamics. At the moment, based on this study, based on this behavior analysis, based on this study, it tells me that the daily average movement is about 110. Now, being an intraday trader, we have to be realistic in how we take our profit. Now, I would say that if I were to able to capture about 20% of the average daily movement, I'll be very happy. I'm not going to catch 110. 110 point means that I'm very unrealistic. I'm trying to buy the low, sell the high. That's not realistic, right? But based on the current market dynamic, I think to capture 20% of the current range, 110, 20% means 22 points. I think it's realistic, but provided you're skillful with your entry level. Okay. Now, so as of March and April, not much different in market dynamics, about 110 points every single day. And 20% is about 22 points. Now, this is a 15 minutes chart. Now, I want to see 15 minutes chart. I'm on the topic of intraday trading here. Okay. Now, it means that you have no idea to carry position overnight. So basically, the day started about on the 30th of March. Okay, they started here at 12 midnight. These are Singapore timing, 12 noon, 6 p.m. And these are the nighttime. Nighttime is active. And basically close about 4 or 5 o'clock and close here. And these are the next day. Now, could you, 15 minutes, I'm going to give you a few seconds to identify where is the hammer that's interesting to you within this intraday. It means that by 4 p.m. or 5, I need to get out. Could you recognize right now that where is the opportunity? Okay, so even intraday trader, I do the same thing as well. I try to buy on dips. I try to buy on dips because the major uptrend is on the uptrend. Okay, now you could see that you're right. Okay, there is this hammer, a hammer that carries weighting, and those that want to learn what the hammers that carry weighting, please go and visit the topic about market reversal. Okay, where I will flash that again in case you missed it earlier. Now, so basically, is this: if you get in at 2160 about here, okay, but first you have to be very skillful in getting in. Okay, watch the video. I think you'll be quite skillful to get in by then after you watch the video. So once you get at 2160, that means after this you get at 2160. Remember, how are you going to target for a profit? 22 points, right? And you have no idea how the market will be for the next day because you position yourself as an intraday trader. It means I get in, by end of the day, 22 points, I just want to get out. And to fulfill that, 22 points to get out. So we just, for intraday trader, you have to understand how we manage that is that less is more. It means that collectively, we just want to collect. But each time when we make a mistake, we just get out. It's also very small
risk also. But we have to be very skillful to get into the market. That's all I have to advise you. But during the Q&A, you can discuss about it more. And before I go to Q&A, please start to submit your question. Let me just give you some administration work, because the organizer last year I did that. I have this trade challenge. It means that after this program you attended, I will continue to recognize with you the Hamel and inverse Hamel, or the candlestick that has high weighting. For this round, they wanted me to do that as well. Then I'll email to you, okay? So last round, we have total for the whole month. I think that was in January or Feb. We spotted about 10 good trades, and 7 have came to pass. 3 failed, but that's okay because it's a measured risk. So the organizer asked me if I could do the same as well to the participant tonight. I said, sure. Okay. So now this was what I did. That means every week I try to showcase you one potential move, potential reversal. Now I can be wrong, but I just want to show that it can be done, and you can do that as well. If I can do it, you can do it. Okay. By the way, I didn't study financial in my university. Okay, so I'm an engineering student. Now, if I can do it, you can do it as well. Okay, so what I did then was on the 20th of Jan, I'm going to email you all this potential move to you for the whole entire month of April. At least once a week. If I have more, I will give you more. Now, I say that on the 60 minutes chart, study shown there's a potential reversal from the morning high. State your reason on the crude oil, okay, the NYMEX crude oil. So what we saw was a very high-weighted inverse hammer, and that's what I challenged the participant to think. Do you think it's possible? Okay, if you short here, put a measured risk here, do you think it's possible? So they discuss about it. Then subsequently, it really came to pass. Is that this was the day itself, and subsequently this is daily chart. Of course, you don't see the inverse hammer. But switch to daily chart, you can see that the market start to dip. Okay, my view. Remember, the short-term trader is what's your view? It's between 2 days to 3 months. Starting from here, 1 month, 2 months, 3 months, and this is exactly what I hope to see, and also encompass some fundamental analysis, because pandemic just kicked in around globally last year, if you still remember. So it kind of timed nicely with the behavioral finance, behavior analysis with FA. So we can hold it for about 3 months, but of course I never expect that it will go below 0. But of course, in that situation, the pandemic has spread all over United States and Europe. If you find that if you have a short position in crude oil, you want to roll it over for the June contract, you can always consult your broker to do so. So these are the trades that I will be forwarding to you for the whole entire of April, at least once a week. Okay, if I can spot more, I will forward to you. But with disclaimer, all these views are for my personal consumption. So basically, my whole idea is not to ask you to trade, but I hope that I can inspire you that if I can do it, you can do it as well. Okay. Now, how to receive the my email on this trade challenge is that you can take a picture if you could. Then after that, you apply for it. So you do a QR code scan if you're interested to receive this trade challenge for the whole entire month of April. At least I will forward you 1 case study every month. Do this QR code scan, then I know that you're interested. I will email to you. That also gives me a permission that to email to you because of the DNC of PDPA. Okay, once I receive your request, I will also forward the deck to you tonight as well. Okay, including what the CME product, that I also will include that as well to forward to you. For those that please take a picture. If you have not, I'm going to count to 3, 3, 2, 1. Going to move on to the next slide. Now, so if I miss out the identify market reversal, you can for those that join us much later, I have this 1-hour program with the organizer as well, that we identified the hammer that has high weighting. So after this program, we finish at 8. Please remember to hop on to this program. It's recorded. You can view it, and from there, you'll know how to identify what are the hammer that has high weighting. So after that, you find that you want more. Is there something you can learn more so that you can take advantage of the current market volatility? Yes, you can join me for the next program. I will talk a lot about BA and TA, technical analysis and behavioral analysis. So this is a program called Timing the Market. I spent a lot of time to work this out, and it's been in the market for in the past was a physical class,
But this year I converted to online. It was very well received, and I hope they can join me. The title is called Timing the Market. In this QR code, you'll find that. So basically, I'm going to drill into much deeper on not just TA, but BA. How to, is a third level of identify market reversal. We're not just going to study one price or one hammer, because sometimes the market may not be so straightforward. We're going to study into a cluster of prices or cluster of candlestick development and or its volume. Sometimes we're lucky enough, we saw one hammer, nice volume, that's good. But market is much more complex than we think. Sometimes may form in a cluster of hammer or candlestick that we just have to read into it. So I'm going to dwell into how to do that. And after that, these are e-learning. What I do is that I will have this weekly case study, and the participants love it because the e-learning, they can view it again and again. After that, every week they'll look out for my case study. Then they can practice their skill. If something that they do not understand, they will revise back to the e-learning platform again. They revise that again, then they'll wait for next week for my case study. So I'm just going to give them case study and they just enjoy it. And usually I don't give discount. You know that for those that follow me, I do not give discount for my program. But first of all, this program, I want to make it available for most of the retail investor or traders. I did not price it very high. I price it at a very affordable rate. But usually for partnering event like this, I think I should give discount. And also, I will also give discount to two category of people: the invited ones and also my partners. Okay, so the organizer, they're my partners. So if you could, what you could do is that after you finish the market reversal studies, you could visit this course, this curriculum, go through the curriculum, go through the whole curriculum. If it makes sense to you, you want to move on to the third or fourth year in this program, just go ahead to subscribe. And there's a discount, a 20% discount. So you can key in this coupon code 06APR21, which is today's date. It's in caps lock. Okay, key in this coupon code, you'll receive a 20% discount for this program. So it's a lifelong learning program. And then there's a weekly case study. You can have it perpetually. Then you can revisit the e-learning. So I just felt that I just started this year, but many of them have benefited because they really learn. So in the past, there's no way I can assure the learning journey, because after the class they say it's good, but I'm not too sure whether are they learning or not. Okay, this one, the whole group, they have a good chat, and I'm very strict about it. There's no minor chat. It's all about business. It's all about market. So yeah, go and visit that. So with that, we left with the next 5 or 10 minutes. I would like to open up this Q&A. And okay, last information that I have here is that do follow my or like my Facebook page. My Facebook page, the name is Kon Hao, my name, joined together. Every day I'll read news and I'll summarize news. I'll give my opinion, and sometimes I will also publish charts that have potential reversal as well. Okay, so if you could go and like Kon Hao, so when I publish a news, you will receive it also. These are the rest of the information. And with that, we'll just go to the Q&A right now. And if there's any questions.
Yeah, okay, thank you, Kon Hao. Moving right on to the Q&A segment. Someone from the audience would like to know the time frames you use and recommend for short-term and intraday trading the S&P and Nasdaq indices.
Okay, very good question here, but let me just cover the intraday trading first. Now, intraday trading, I will look out for 15 minutes. And I also sometimes will play around with 60 minutes and daily chart as well. It just, when I play around 60 minutes of daily chart, it just give me a sense of where is the main trend. Remember, just now we studied about identify the trend first, right? You play around with different time frame. And after that, I will zoom into, say, 5 or 15 minutes to get into a precision entry. So when I study into 60 minutes or daily chart for intraday, it's just to give me an idea where's the trend right now. Then after that, I zoom into 15 or 5 minutes will give me the precision entry. Okay, so good question. Then as for short-term trading, so I will even look at monthly or weekly chart. Remember just now the 110 years old chart, that was maybe a yearly chart, I do not know. But we look at the long term just to get an idea of where's the trend right now. Then after that, when we plan for short-term trading strategy, I may drill down into daily to
hourly chart, just to form some idea to have a position overnight? I think it's an excellent question. Thank you so much. Yep. And any other question for the next one?
Yep. The next question is, you were showing the 15-minute chart just now. What about the 5-minute or 1-minute charts?
Yes, I think it's very related to earlier the question. Like what I say, we will always play around with different chart. For example, sometimes when the market is not volatile, yeah, earlier I said about there are two rules when how we select the market, whether it's tradable or not. There are two rules. That's my personal rule anyway. It must be volatile and must be liquidity. And the good news that all these 4 US indices have high liquidity. But volatility is really subjective. It really depends on the market then and then. What if during this period the market is not volatile? Then if you look at 1-minute chart, it doesn't speak much to me because the market don't move. But it could be a time and period that this period is very volatile. When you can look at 1-minute chart, the market is volatile. You could see meaningful hammer, meaningful inverted hammer. So it really depends on the market whether I want to use 1 minute or not. Because during that market dynamic, that time and season, that 1 minute, that market is not volatile. So I will not use that 1 minute. But if, say today, 1 minute is very meaningful because through 1 minute you can see very meaningful formation of hammer, engulfing body, all this and that. Then go ahead to use 1 minute. So these are very subjective. Okay, maybe the next question.
All right. The next question is, do you set stop loss for intraday and short-term trading?
Definitely. So earlier I said that as an investor, I may not have stop loss because when we invest, we're buying into intrinsic value. Now, usually as an investor, I will commit myself to keep investing until the market go up. Okay, and I have no stop loss as an investor because we can calculate the intrinsic value. But swing over to the other side as a trader, I'm very clear. I've divided into this quadrant, the 4 quadrant. As a trader, I'm just participating in the market volatility. I may not have a view on the long term. So every time when I trade, I will have to have a measured risk. That means every time I'll do my best, you should do your best to get into the market at best that seeing that market will perform. But what if the market do not perform? Because we are not long-term investor, we are short-term trader. So we just expect that within the next 2 days to 3 months, market will perform. Now, what if the market do not perform? Then you have to do the exit plan. Simple as that. Yeah, maybe I should just also showcase the last segment about measured risk and before we close the program tonight. And let me just touch on, maybe I just borrow about 5 minutes of your time. We'll look at the live case study here. I can get the live chart up. Let me see if I know how to use this program here. Earlier I could, but now I'm a bit lost. So I wanted to get a live chart up. Okay, anyway, let me just showcase with you about stop loss, which is, to me, that's very important. Now, how to create a stop loss is this. Let me just get back to this one, okay? Yeah. Now, we could see that at this point in time, 2160, okay, is my entry point because why? We have seen a hammer that surfaced with high weighting. So let's get in and target 22 points. Now, what if you're wrong? How should you manage your risk? Very simple. Because why I buy? Because I bought here is because I believe that the low has been established. Now, this statement is very important. Why I buy is because I believe that the low has been established. Therefore, I bought into it at 2160. So in the event that market do not go up, I did not clear at 22 points, the market come down. Now, how will I have to plan my stop? I bought in at 2160. This is about 2140. 6040 is also 20 points. And what's my stop loss? What's my damage here is that is 20 times 5 is 20 times 5. How much is it? Yeah, so you will know the amount, 20 times 5. So these are the amount that I prepared to lose. So every time I can tell that every time we enter, we have to do our best, that we expect for the best, but we also plan for the worst as well. Okay, so the whole idea about trading is that you have to be very skillful. You collectively collect all the small earnings. In the same time, when you are wrong, you also risk the small losses as well. This is very important. But you try your best to be as skillful as you can. You collectively collect
more small earnings and lesser losses, and just amalgamate your performance, and over time you'll make perfect sense to definitely make a lot of perfect sense to me, and I hope you make a lot of perfect sense to you. Okay, I just want to really encourage you, if you could participate in this program. It's a lifelong learning program, and these are the coupon rate. And I forgot to mention one thing, there's expiry date though. It will expire tomorrow at 12 noon. So with that, thank you so much for staying through the last 1 hour. And also want to thank you, the sponsor. Thank you.
All right. Thank you very much for the insights tonight, Konghao, and thank you very much, everybody, for your time tuning into this webinar tonight. We'll be sending everyone a link to today's webinar so you can watch it again if you'd like to. That's all for today. Thank you, everyone, and goodbye.